Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Tuesday, and it's March 15th. Hey, we got a lot to go over today, so we're just going to jump right into it. As we mentioned yesterday, even though yesterday was the exception for this week, we've got a lot of data coming out this week, including the biggie this week will be the FOMC, which we'll get into in just a bit. But first, let's start off with the retail sales for the month of February. So back in January, we had 0.2% growth in the retail sales, but there was expected pullback of 0.2% and a pullback of 0.1%. So slightly better than what the expectations, but the fact is we did have a pullback. Now, if you exclude the bigger ticket items like autos, we had a 0.1% back in January, and the forecast was supposed to be even worse at negative 0.4%, and it pulled back 0.3%. So again, not the greatest news right there. Producer price index. This is the wholesale inflationary numbers, which is not. It's about. I would say I would interpret this more as a medium in terms of what we look at for terms of data level of importance or volatility, because we look mostly at the CPI and we look at the PCE because those are what affect consumers, and sometimes what affects the producer doesn't always get passed on to the consumers. So that's why we just kind of look at this as more of a gauge about medium level. So to get to the point, we had a 0.1% back in January. The forecast was supposed to come in at negative 0.2%, and a pullback about 0.2% came in expectations. On the bright side, we had the Empire State Index. This is the manufacturing New York region. As you can see, we've been having some pullback over actually almost as much as 5 months, if I recall right, for New York region. We had a negative 16.6 in February. Forecast was supposed to be in the negative at negative 0.10. And it came in at 0.6, so this is going to create some, not concerns, but actually maybe possible optimism. What people are going to be wondering, okay, are things starting to stabilize a little bit in the New York region, or at least in factory orders here? So this will be interesting to watch going forward if this will continue to improve, especially after the Fed raised rates back in December. Manufacturing took kind of a beating as the cost of goods are a bit more expensive to sell overseas. Let's jump into the Home Builders Index. This is the confidence level, our index that kind of shows the confidence level of home builders out there. And basically stayed the same. So we had a 58 back in the February. It was supposed to have a slight uptick of 59, and it stayed the same at 58 in March. Business inventories continued to go up a little bit. We had a 0.1% at the close out the year. Forecast supposed to be nil, and it went up another 0.1%. So again, very much a mixed bag of news here. Especially retail sales is something they're going to really heavily look at here for the Fed meeting going on, because obviously the Fed members are going to see these data before they make their final decision tomorrow and make their announcement. As we've seen, job numbers have been improving, but it's showing that people aren't really spending money. So to get this economy kind of moving, this is obviously going to affect our first quarter GDP, as they're hoping that the year-end GDP will be about 2.3, and this could make it a little bit more difficult to attain that if people aren't spending money. Stock market's currently down. It's more or less kind of getting set up for tomorrow in case there's any surprises, especially with the mixed bag of news was coming in, and of course we had the European Central Bank came in with their meeting with all the stimulus packages that they came in. Plus we got a couple others going on this week. Bank of Japan basically left it open for possible stimulus packages on their side of things. So we got Bank of England coming in this week, Bank of Switzerland as well coming in this week with plans. So also to note, oil came down to about 36. So as we've seen pretty much this year, oil has been kind of dictating the stock market. So if oil goes down, so does the stock market. Oil goes up, stock market goes up. And today is no different. Again, today is the start of the FOMC, so tomorrow will be the announcement, so expect a lot of volatility in the morning throughout the day as they kind of hear the announcement from Janet Yellen and then go through her transcripts and decipher what was her meeting and proceed from there. Bond market, we were up. We started the morning actually up about 13 basis points. Right now we're down. We're down for the day, but we're up about 3 basis points from where we left off yesterday. So that's kind of important to note that we're higher than we were yesterday. We did have a nice day beginning, and we pulled back quite a bit yesterday. So this is something we definitely want to pay attention to. See if we can get that spring that we've been kind of waiting for here. But as of right now, interest rates, I would say, about the same where we left off yesterday. If they didn't do a price change yesterday when they pulled back, they may do a worsening today, so there's a good chance some lenders may come out with worse pricing. So overall, I would say kind of mixed depending on the lenders out there. All right, folks, I know that's kind of a half glass full or whatnot, but hopefully that made sense for you guys. So basically, as you can see, the bond, the green, as it pulled in yesterday, towards later in the day, this pulled back quite a bit. So a lot of lenders may not have priced that change in pricing there. And then today we started off and we pulled back quite a bit. So if you're on the West Coast, chances are you probably had a your pricing is going to worsen from where it was yesterday. And if they did do a price change yesterday, it'll probably be about the same. Okay, hopefully that made sense. You guys have a great day. Thanks so much for watching. We'll see you guys tomorrow.